Assalamu alaikum. Welcome to my YouTube channel Updates by Qazi. State Bank of Pakistan has once again slashed basic interest rate from 9% to 8%. In a meeting of Monetary Policy Committee on Friday, the State Bank of Pakistan has reduced the Pakistan's policy rate by 100 basis point from current 9% to 8%. The MPC said that the action was made in the light of the State Bank's inflation outlook, which has improved given the recent cut in the domestic fuel prices. This is the fourth time in the 3 months that State Bank has slashed the policy rate. In the space between March 17 and May 15, the State Bank of Pakistan has now cut the policy rate by a whopping 525 basis points from the relatively high 13.25% to current 8%. More specifically, the cut in the policy rate by 75 basis points to 12.5% on March 17, by a further 150 basis points to 11% on March 24, and by 200 basis points to 9% on April 16. The central bank around the world have slashed the interest rate, though perhaps none as aggressively as Pakistan's State Bank of Pakistan. According to a recent report by Bloomberg, Pakistan has cut its interest rate the most this year out of a survey of 9 countries, including US, Peru, South Africa, Turkey, and Ukraine. In explaining its rationale for cutting the policy rate, the State Bank of Pakistan noted that the coronavirus pandemic has created unique challenges for the monetary policy of the country due to its non-economic origin. While easier monetary policy can neither affect the rate of infection transmission nor prevent the near-term fall in economic activity due to the lockdown, it can provide liquidity support to the households and businesses to help them through the ensuing temporary phase of economic disruption, the State Bank of Pakistan clarified. The State Bank also maintained that the rapid policy rate cuts had helped maintain credit flows and bolstered cash flow of the borrowers, thereby limiting contraction in economy. According to State Bank of Pakistan, inflation could fall closer to the lower end of the previously announced ranges of 11 to 12% this fiscal year and 7 to 9% next fiscal year. In January 2020, the inflation rate had hit a record 14.56%, according to the data released by the Pakistan Bureau of Statistics. However, it has been declining since, slowing to 12.4% in the February and then 10.24% in March, finally settling at 8.5% in April. Many analysts expect it to drop to 8% or 7% in the coming months. As a part of the international monetary policy, IMF loan agreement, Pakistan has been given strict instructions to maintain positive real interest rate, that is nominal interest rate minus inflation rate. The rapidly decreasing inflation rate has given the State Bank of Pakistan wiggle room to decrease the policy rate. For its part, the MPC said that the significantly reduced petrol and diesel prices by 30 to 40% in response to the continued fall in the global oil prices will further reduce inflation. It also said that both the fall in inflation in Pakistan since January and the expected further decline next year are the highest among comparable emerging markets. However, the MPC did have some concerns about inflation. Inflation could fall further than expected if economic activity fails to pick up as expected next fiscal year, the statement said. On the other hand, there are some upside risks from potential food price shocks associated with adverse agriculture conditions. Price pressures could also emerge if the economy gains greater momentum in the second half of financial year 2021. The MPC was oddly optimistic about Pakistan's economic and fiscal outlook despite poor export and import numbers. Exports declined by 10.8% year-on-year basis in March, while imports contracted by 19.3% year-on-year basis. The figures were even worse in April, with exports declining 54% on year-on-year basis and imports declining by 32% on year-on-year basis. However, the MPC maintained that the current account deficit had continued to narrow and that the outlook for the external sector broadly remains stable. The recent fall in portfolio inflows will be offset by fiscal official outflows committed by the international community, such that Pakistan's external position remains fully funded. Together, these developments, buttressed by the flexible exchange rate regime, should be continued to support a steadily build up in the State Banks of Pakistan's foreign exchange reserves buffers. The MPC called the remittances resilient, though noting potential downside risks given the economic difficulties across the world, especially in oil exporting countries. On the fiscal front, the primary balance recorded a surplus of 0.4% of GDP from July to March of the financial year 2020 against the deficit of 1.2% in the same period of financial year 2019. This is the first 9 months surplus since financial year 2016. However, the substantial fall in the economic activities since March significantly affected tax revenues. After rising by 17.5% from July to February 2020, the tax revenues declined sharply by 15% in both March and April. Given the needed increase in spending to support healthcare, businesses, households, and more vulnerable segments of society, the fiscal deficit is expected to widen substantially in the quarter 4, the committee said. Large-scale manufacturing witnessed a steep decline of 23% in March due to the virus. Meanwhile, the high-frequency indicators of the demand, such as credit card spending, cement dispatches, credit offtake, and POL sales, showed a mild contraction in domestic economic activity in both March and April. The MPC noted that Pakistan has begun to ease lockdown, which could help support economic activity. However, it remained worried of the situation, noting that the infections could rise again, leading to another wave of lockdown and a sluggish recovery. Besides, easing of lockdown might not actually improve economic activity, as the statement pointed out. In the light of preliminary evidence from China and other countries that eased lockdown earlier than others, activity in service sector and consumption, which form a large part of the domestic economy, could remain subdued for longer. So these are the updates for the policy rate reduction. We hope that this reduction will cause the cost of many financing activities at lower side. For example, the car financing will get cheaper and many other things will also be cheaper for the Pakistani people, and we hope that this reduction will result in improving the economic situation in the COVID hit economy of the country. So thank you for watching. Please like my video, subscribe to the channel, and share it with others. Thank you very much. Goodbye.